All right, to proceed from here. Stopped.
Last one for that.
Oh, you are not in, eh? Inabidi tunanunua mingi zetu zote hapa. Yes. Going concern. We are winding up. We are winding up on audit procedures. Audit procedures. Audit procedures on going concern. Audit procedures on going concern. Now, how do we assess? How do we assess going concern position of the client? We've been sent there as auditors. We are the audit staff. We want to get to the core. We want to get proper understanding, yes, of the going concern position of the client. Yes, we'll summarize here and say that number one, we need to check through the minutes. Remember when we were discussing ISA 310, background information, screening of the client, we said that number one, minutes are a very rich source of information. And so is when we are assessing the going concern of the client, minutes will shed lots of light. Right now we are at month, yes? You'll find that directors, the payroll department are meeting, they're deliberating on how to get the funds to pay the salaries. You'll tell there's a problem. They're not able to pay their suppliers when they fall due. Minutes will reveal a lot of facts, a lot of information, because that's where all the deliberations are captured. That's where all the deliberations are captured. Number two, we can check through the, yes, or reviewing. Let me talk of reviewing or checking, it's okay. Checking through the management accounts, and even the interim accounts and the interim accounts. Yes, we are in March. We are in March. The books of accounts the clients are preparing are the management accounts. They can shed some light on the on the going concern, and especially the financial aspect. The financial aspect. You can see the sales, the revenue, the profit margin, the ratios, yes, in the management and interim accounts. Number three, you can always review the repayment of debentures and other loans. Maybe kama wanaweza kulipa loan. These debentures, are they able to pay us, and when they fall due, do we have any accruing, any outstanding advances that the client is unable to pay? So utaangalia the debentures and any accruing interests. Is the client in a position? Is the client repaying them as and when they fall due? You can also check the PFI, the prospective financial information of the client. Remember, we discussed this under it's a number 810. Yes, you can check the PFI. The PFI will reveal the provisions made. Yes, because PFI indicates the future of the entity, the projections of the entity. We want to see what is entailed in these projections. We have elements which have been captured with intentions to take care of the going concern complications, and especially those which are of financial nature. Because if you're not able to repay now, yes, we could be creating provisions to make these payments in future. So it will still shed more light on the future of an entity. Tutaangalia uone loans ziko namna gani, the gearing level ya this entity, the projected gearing level iko namna gani. Then number five, we can engage lawyers. engage lawyers. What the lawyers will do, they will shed light on any ongoing litigations, because we know that some litigations are life-threatening as far as businesses are concerned, that if an entity loses a case, it may mean that an entity is no longer a going concern. So what the lawyers will do, they will shed light to indicate the direction that the cases are taking, chances of winning or losing the case. Yes, they can always know this. They can always know this. Number 6, we want to get right on how assess how the client intends to deal with unfulfilled customer orders. We are assessing to check how the client wishes to deal with unfulfilled customer orders, to deal with unfulfilled customer orders. What's the relevance? You know what happens in most cases? I don't know whether you've ever found yourself in such a quagmire that you are dealing with your client as usual. There's somewhere maybe you place your orders. Maybe you're in the business of buying and selling cosmetics. You go buy in bulk, then go sell in small quantities. So it may reach a point where maybe you've sent some monies, you've placed your orders, not knowing that the client is facing going concern complications. You've already sent your money. They've not delivered. Yes, like what happens with regard to banks. Unakuta kwamba you wake up one day, you want to go do some withdrawals, the bank is crossed. Yes, with a notice to our esteemed customers. We apologize for ABC. Yes, we'll be communicating in due course what will happen to your deposit and so on. So it gets people by surprise. So some people may have placed some orders, paid some deposits for goods to be supplied, for services to be offered. Now we want to get right as auditors, how the client wishes to deal with such unfulfilled customer orders. Number 7, we can look at the enforceability. Enforceability of any existing letters of support. We assess on the enforceability of any existing letters of support. So we confirm the enforceability of any existing letter of support. Yes, either from components of the group or third parties. I told you that you can get this support from the components of group, the parent, subsidiary, sub-subsidiary, or even from an outsider. An outsider, we are referring this to a third party. We are referring this to a third party. Remember, I'm summarizing so very much for you. Then I'll give you the full notes the way they look like. This is what you usually write on the margin. Nikupea notes mingi. Yes, in your story unaandika hapo kwa margin. Number 1, minutes. Number 2, you check on you talk of management accounts. Number 3, debentures. Number 4, PFI. Number 5, lawyers. Number 6, unfulfilled orders. Unfulfilled orders. Number 7, letter of support. Letter of support. Number 8 is a 580. What is a 580? Yes? 580, not 810. 580. Going concern, no. Going concern is 570. Hii ya mwisho ya nyuma, yes? Hii ya mwisho hii ya nyuma ndio hiyo, si ni kweli? That's correct. Sababu ya mwisho ndio ya nyuma, the management representation, management. So you said that's always, thanks for trying. That should be always our last point, that we've tried all the procedures, we've executed all the substantive tests, all the audit procedures that we can perform, but to ensure that we avoid negligence, number 8, seek written representation. Seek written representation, seek written representation from management regarding its plans, from management regarding its plans for future action. So we wrote this. Kuna mari tulijibu hii swali. Ile swali tulijibu ya, is it 2014 somewhere? We were asked, do you need a representation letter with regard to organization's plans to alleviate from going concern problems? We said yes, because we can't know, not unless they tell us, we can't know what they intend to do, what are their future plans with regard to the going concern complications. So we need to seek a representation letter, seeking a representation letter. So those are the 8 cardinal points with regard to audit procedures on going concern. Very important, the last subtopic, conclusion and reporting. Conclusion and reporting. Conclusion and reporting. Conclusion and reporting. There's a statement I made when we introduced this topic, actually even before we introduced, and I indicated that the auditor reports, yes, auditor reports on whether the going concern assumption is appropriate or inappropriate. That was we said, that the auditor reports on whether the going concern assumption is appropriate or inappropriate. Is the going concern assumption appropriate or inappropriate? Is the going concern assumption appropriate or inappropriate? Is it appropriate? Is it inappropriate? And that's why I made an emphasis, if you can recall, that when an entity is a going concern and the books of accounts have been prepared as such, then the going concern assumption is appropriate. We are supposed to issue unmodified opinion. Let me take it again. When an entity is a going concern and the books of accounts have been prepared as such, then the going concern assumption is appropriate. So we issue unmodified opinion. Hiyo haina shida. Because it's when all is okay, we proceed to issue, yes, unmodified opinion, unmodified letter of support, enforceability. All right. So we are saying if an entity is a going concern, books of accounts have been prepared as such, then we issue an unmodified opinion. Get this another point very right, that if an entity is not a going concern or its going concern is threatened, we are supposed to prepare books of accounts. We talked over on breakup basis. And this has happened, that an entity is not a going concern, its going concern is threatened. The books of accounts should be prepared on breakup basis, and they have been prepared on breakup basis. So the going concern assumption is appropriate. The going concern assumption is appropriate because entity is not a going concern and the books of accounts have been prepared as such. So we issue because the going concern assumption is appropriate. In this case, we issue unqualified opinion. Remember, unqualified opinion is a good report. So we issue unqualified opinion, then introduce an emphasis of matter paragraph. And that's why we can't issue unmodified, because it's already modified, but with modification not affecting the auditor's opinion. Again, we could be having issues of material uncertainty. Material uncertainty, that is ISA number 540 or IAS number that's 7. When we have material uncertainty, yes, an entity is a going concern, but we have material uncertainties like the litigation, an ongoing case. And there is full disclosure. There is full disclosure of that uncertainty. There is full disclosure of that uncertainty. So again, you issue an qualified opinion and introduce an emphasis of matter paragraph. We indicated 3 items that would make us to introduce an emphasis of matter paragraph. When we have going concern complications, where we have material uncertainties, where we have material inconsistencies. So when we have material uncertainties and they have been fully disclosed, there is full disclosure, then you issue unqualified and then introduce an emphasis of matter paragraph. These are interdictators of points so that you get them right. Let me just summarize them first. Then there could be material uncertainties that you feel they have not been captured, or the way they've been captured, you are disagreeing. That's where our tabulation on codification matrix comes in. That sometimes maybe they are not disclosed, other times they've been disclosed, but you disagree on that which have been disclosed. Again, that's where you assess on whether to issue a disclaimer or adverse, or even qualified, depending on whether that information which you feel has not been captured is material and pervasive or not. When do we issue adverse outright? When do we issue an adverse opinion outright? When an entity is not a going concern and it has been prepared as if all is okay. That's a major disagreement. It's highly pervasive. It's misleading. Highly misleading to investors, to financiers, to any intended user. We disagree that the going concern assumption is not appropriate. It is inappropriate. We issue an adverse outright. If we feel that we need management to disclose some information pertaining or relating to going concern, then they decline. They fail to avail this information to us. And we consider this information as being very sensitive, material and pervasive. Outright, we issue a disclaimer of opinion. We issue a disclaimer, but it's about our assessment. And that's why we say auditors form opinion, their personal opinion. And that's why you find even in litigations, a higher court may reverse a decision of a lower court because they argued differently. Sometimes you feel the ruling was not fair. You proceed to a higher court, and so on. Yes. So it all depends with the assessment of the auditor. A different auditor would give a totally different opinion, and they're able to support their conclusion. But if you feel that which you expected is material and pervasive, you describe. If it could be material and not pervasive, you issue an except for opinion. So neither to the boyet we are discussing, yes, only that now you relate it with the going concern information, which could be available, not available, which you could disagree with, and so on and so forth. It's just 3 paragraphs. Let's capture them as I emphasize further. Or you have already written. Already we have it in place. We have it in place. So number 1, Roman number one, going concern assumption appropriate, going concern assumption appropriate, going concern assumption appropriate, going concern assumption appropriate. Yes, so tumesema going concern assumption is appropriate, but a material uncertainty exists. But a material uncertainty exists. But a material uncertainty exists. So hiyo ni mambo ya litigation, kama kesi inaendelea, that's a material uncertainty and so on. So under that, have hyphen number one. Hyphen number one. Hyphen number one. Under that should look like a subtopic line and say, the auditor should consider whether the auditor should consider whether the auditor should consider whether the financial statements, the auditor should consider whether the financial statements, consider whether the financial statements adequately disclose, adequately disclose, adequately disclose the principal events, adequately disclose the principal events or conditions, adequately disclose the principal events or conditions that give rise to doubts, adequately disclose the principal events or conditions that give rise to doubts, that give rise to doubts, that give rise to doubts on the entity's ability, on the entity's ability to continue as a going concern. Yes, disclose the principal events or conditions that give rise to doubts on entity's ability to continue as a going concern, to continue as a going concern. So hiyo ndio tunaangalia, tumesema lazima kuwe na proper disclosure. Yes, so have A under that. A, we have Roman number one hyphen, then A. If adequate disclosure is made, if adequate disclosure is made, if adequate disclosure is made, tumesema aje? If adequate disclosure is made, you do what? Remember, our first statement is saying, going concern assumption is appropriate, but material uncertainty exists. Yes, yes. We issue unqualified, but with an emphasis of matter paragraph. Sababu kuna material uncertainty. Remember the three instances. Going concern complications, material uncertainties, material inconsistencies. So here we issue, or is okay, there's full disclosure. It's a good report. That's where we said we issue unqualified, but we introduce an emphasis of matter, emphasizing on that material uncertainty. So we are saying, if adequate disclosure is made, the auditor should express an unqualified opinion. Unqualified opinion. Yes, Mr. Oppo is saying emphasis of matter paragraph. That's very correct. So issue an unqualified opinion, but modify the, yes, I take it again. If adequate disclosure is made, the auditor should express an unqualified. If adequate disclosure is made, the auditor should express an unqualified opinion, but modify the report. But modify the report by adding an emphasis of matter. Modify the report by adding an emphasis of matter paragraph. So I take it again. If adequate disclosure is made, the auditor should express an unqualified opinion, but modify the report by adding an emphasis of matter paragraph. Sababu, there is full disclosure. 1, there is no disagreement. 2, we have all information that we expected. So we rule out adverse, we rule out disclaimer, we rule out except for. But because of uncertainties, we issue an emphasis of matter paragraph. The books of accounts portray true and fair. They portray true and fair. All right, B. So B tunasema if there is no adequate disclosure, right? And say if adequate disclosure is not made, if adequate disclosure is not made, if adequate disclosure is not made, if adequate disclosure is not made in the financial statements, adequate disclosure is not made in the financial statements, the auditor should express a qualified, the auditor should express a qualified stroke except for, a qualified stroke except for opinion. Auditor should express a qualified or except for opinion or adverse opinion or adverse opinion as appropriate, or adverse opinion as appropriate, or adverse opinion as appropriate. Nataka nikusaidie kuelewa hiyo statement vizuri because kuna mahali nimekueleza kwamba if we have some information which we expected, but we expected with regard to going concern complications, but the management fails to avail such, we're supposed to describe. But if we have all the information, but this information have not been disclosed in the notes to the financial statements, we talk of the 5 sets of financial statements, including the notes. If it's not in the notes, that's when you are assessing. You disagree because they're not complete. The financial statements are not complete. So you assess the aspect of or the extent of disagreement. Is it material pervasive, material not pervasive? That's why there's a leeway. You can do an except for or an adverse because there's a major disagreement that the management did not disclose all the facts in the notes to the financial statements. Are you seeing the disagreement and the failure to avail all the evidence? Yes. A question, bring it on.
They have not disclosed in the notes. So where are you going
to the element is, yes, that's a very good question. And that's what I was trying to bring on board here. There are some instances that management fail to avail evidence. You try all the means and they don't avail this information. So you are supposed to modify the report citing limitations on scope. So that's where the disclaimer will come in, or even the except for, with regard to limitations on scope. Other instances, away from even the going concern aspect, the invoices are there. The invoices are there, for instance, but they are missing in the financial statements. So these are disagreement on figures and amounts. We are disagreeing on figures and amounts. You feel that all has not been captured, but they are there. Yes. So with regard to going concern, management could be availing some evidences to us, maybe orally. Yes, that we've not been able to pay this supplier amounts to the tune of 1.2 million because of this and that, but we have agreed with them that we'll structure the repayment, but that has not been captured in the notes. And this could be one of the indicators of going concern complications. So we are disagreeing that this should be disclosed. This should be disclosed. The element of disclosure will dominantly feature again in the related parties. We know they are related parties, but they've not been disclosed. That alone can lead to adverse opinion. Sisi tumepitia vitabu tumeona kuna related parties and they have not been disclosed. Even if they've not entered into fraudulent transaction, that alone may lead to us issuing an adverse. Failure to disclose. We have the information, but they've not disclosed. You choose either to issue an except for or adverse because it's a matter of disagreement. I don't know where the head, yes, is appropriate. Excellent. That was Roman number 1. We've assessed the situations of full disclosure of such information and lack of full disclosure of that information. Let's look at Roman number 2. That was Roman number 1. Roman number 2. Going concern assumption inappropriate. Going concern assumption inappropriate. Going concern assumption inappropriate. Going concern assumption in. Hapo ndio tumesema hakuna reverse. Hapo ni outright adverse. Going concern assumption inappropriate. Kumaanisha ndio hii nimeelezea hapa kwamba an entity is no longer a going concern, but the books of accounts have been prepared as if an entity is a going concern. Those financial statements are misleading and they don't portray true and fair. Kuna mtu atawekeza pale. Kuna mtu atawekeza pesa pale as an investor, thinking that an entity is a going concern. So those financial statements are misleading. What are we doing as auditors? We disagree. We are disagreeing with the criteria of preparing the financial statements. They ought to be prepared on a breakup basis. But the client has prepared them as if the entity is a going. We disagree on the criteria of preparing the financial statements. Sorry, and say, if in the auditor's judgment, if in the auditor's judgment, if in the auditor's judgment, the entity will not be able, if in the auditor's judgment, the entity will not be able, to continue as a going concern, if in the auditor's judgment, the entity will not be able to continue as a going concern, the entity will not be able to continue as a going concern, comma, the auditor should express, the auditor should express an adverse opinion. The auditor should express an adverse opinion. The auditor should express an adverse opinion if the financial statements have been prepared. If the financial statements have been prepared, we are saying the auditor should express an adverse opinion if the financial statements have been prepared on the going concern basis. If the financial statements have been prepared on the going concern basis. If the financial statements have been prepared on the going concern basis. I hope you get that right. That the books of accounts have been prepared on going concern basis, but the auditor feels otherwise, that this is not a going concern entity. That's a disagreement, and it is a major one. It is a major one, hence an adverse. Excellent. The last one, Roman number 3. The last one, Roman number 3. Roman number 3. Management unwilling to make, management unwilling to make or extend its assessment. Management unwilling to make or extend its assessment. Management unwilling to make or extend its assessment. Kumaanisha hawataki kutupea information yenye tunahitaji. Now we leave out the adverse aspect, we talk of disclaimer. It's either a disclaimer or a qualified opinion, depending on the auditor's assessment. So to sum up these two, we say we do what? Some information is missing. We consider this information material. Let me leave out the pervasiveness aspect. This information is material and it is missing. So we could either issue a disclaimer or a qualified opinion. So ours is to modify the report citing limitations on scope. So limitations on scope combines these two, because it's upon assessment. Now you decide whether to disclaim or issue an except for opinion citing limitations on scope. That's excellent. Mheshimiwa Oppo here has gotten it right. All right, let me say, if management is unwilling, we are summarizing that point. Start by saying again, if management is unwilling, if management is unwilling to make or extend its assessment, to make or extend if management is unwilling to make or extend its assessment, to make or extend its assessment when requested to do so by the auditor, 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 comma, the auditor should consider, the auditor should consider, the auditor should consider the need, the auditor should consider the need to modify the auditor's report. The auditor should consider the need to modify his report, maybe to avoid repetition. The auditor should consider the need to modify his report. The auditor should consider the need to modify his report as a result of limitation, as a result of limitation, as a result of limitation on the scope, as a result of limitation on the scope on the auditor's work, as a result of limitation on the scope of the auditor's work, as a result of limitation on the scope of the auditor's work, as a result of limitation on the scope of the auditor's work. Umeona hiyo story sasa. Iko hivyo. Wakati upi tunapeana unmodified opinion, this is when the entities are going concern. The books of accounts have been prepared as such, and so the going concern assumption is appropriate. We issue unmodified opinion. When the entities are going concern but with material uncertainty, then we assess whether there is full disclosure or there is none. If there is full disclosure, we modify our opinion with modifications not affecting the auditor's opinion by way of introducing an emphasis of matter paragraph. If disclosures are not properly done, that's a disagreement. We choose to issue an adverse or an acceptable, guided by the magnitude of what could be, what was not captured in the notes to the financial statements. Going concern inappropriate when the client prepares the books of accounts as if all is okay. When all is not okay, that's a major disagreement. We issue an adverse opinion. Lack of cooperation from the management to avail evidences which the auditor may consider material, then we modify our opinion citing limitation on scope. But the starting point was that the auditor reports on appropriateness or inappropriateness of going concern assumption. It's a very important point to note. Any question? That's how we wind up that topic. That's what was remaining. That's what was remaining.
Does it mean when the auditor makes the unmodified opinion, they are going to sign issues, and then the books are being prepared on breakup basis, and also when they are not going to sign issues
on breakup basis.
Is it also on breakup basis? They are not going to sign it.
Yes, yes. A question of when are we issuing unqualified? When are we issuing unqualified opinion? We are issuing unqualified opinion when we are modifying our opinion with modifications not affecting the auditor's opinion. That's when we are issuing unqualified opinion. When we modify the auditor's report with modifications not affecting the auditor's opinion. Si tumeanzia hapo sasa. When we modify with modifications not affecting the auditor's opinion. Kumaanisha, the auditor's report is still a good report. It's still a clean report. And this can only be issued when we introduce an emphasis of matter paragraph. because this is the modification which does not affect the auditor's opinion. This is the type of modification which does not affect the auditor's opinion, because adverse outright affects, disclaimer affects, qualified affects, but emphasis of matter does not, because our opinion reads, or else the emphasis of matter reads, which is paragraph number 7, without qualifying or report. So that one does not affect. Yes, that's when yes. Ndio unakuta kwa hizo statements zote zenye tumeandika, only A, Roman 1A, we have indicated we introduce an emphasis of matter paragraph because there is adequate disclosure. The books of accounts portray true and fair view. That's what you should know. When we are introducing an emphasis of matter, the books of accounts portray true and fair view. Only that we want to emphasize on something. We want the intended users to know there is an ongoing litigation which along the way may not favor the company. But as we speak, we don't have facts about it. You see this, eh? We want the client to know that the books of accounts portrays true and fair view, but they've been prepared on breakup basis. They portray true and fair view, ziko sawa, but be warned that the going concern of the client is threatened. We want to emphasize, wasidhania tukisema they portray true and fair view, they misinterpret to them saying that the entries are going concern. It's not a going concern, but the books of accounts portrays true and fair view because the going concern assumption is appropriate. But we would like you to know that we are facing going concern complications. Breakup basis. Breakup basis, we prepare statement of affairs and not statement of financial position. Nilijaribu kukachora hako na nitakachora tena tukifanya receivership and liquidation, because audit procedure number 1 as an auditor, you are supposed to confirm that the client prepared statement of affairs and not statement of financial position, and it has been prepared as per the Companies Act requirements. Yes, those are good questions. All right, another query. We move to another topic. Anyone with audit not sent by on how many? The remaining one. Tuko mahali pazuri sana. Mibaka niko relaxed. Hata jua iwake ajisisikii joto. Because mi najua kibinafsi niko safe. I don't know what about vile zimespreadua hivi.
Maybe I don't have the one. Did you give one on the first class?
Tulifanya kwa ubao. But at the tail end of this, I'll say something about what's remaining. We are auditors. We need also to keep auditing ourselves. Yes, if we can't audit ourselves, then this auditing may not make. Break for players. We have a Muslim in our online class. Okay, 3 minutes. 3 minutes. 3 minutes. Welcome back, welcome back, welcome back. ISA number 560. IAS number 10. Subsequent events stroke off. The balance sheet. It's 560. Subsequent events of the balance sheet events. This is another topic that previously CASNEP didn't have appetite on. But the moment they started testing, yes, they tested so often. It used to be a section 4 question and not 6, not advanced. But currently, so we know that these are events arising after the balance sheet date. That's clear even from the heading. Then we say that they could be favorable or unfavorable. Events arising after the balance sheet date, and they could be favorable or unfavorable. They are arising after the balance sheet date. They could be favorable or unfavorable. They could be favorable or unfavorable. Today, we've really mentioned about events that may happen after the end of the year. Say you have an ongoing case, which as at the end of the year remains undetermined, then somewhere in March it's determined and you win the case and you are highly compensated. That's favorable. Sometimes you lose the case and now we are required to compensate the complainant. We are required to compensate the aggrieved person. Then that's unfavorable. That's unfavorable. Although we know that these are not the major classifications, yes? These are not the major classifications of subsequent events. The classification includes adjusting events, and Roman number 2, non-adjusting events. So number 1, the adjusting events. Adjusting events. So we know with regard to adjusting events, they are arising after the B sheet date. Let me show you. I usually like constructing a number line. Yes. So this year is running from 1st January 2022 to that 1st December 2022. Mwaka imeisha. These are 12 months. Then we have these events arising after the end of the year. And that's why we are calling them off the balance sheet events. They are arising after the end of the after the balance sheet date. But now we require, they are arising here, but we require to adjust the previous year's financial statements if these financial statements are to be said to be portraying true and fair view. They are arising after we've crossed the financial period, but for the last year's financial statements to be portraying true and fair view, then we need to adjust. And that's why we call them adjusting events. Good examples of adjusting events, Roman number 1, is a number 240. ISA 240 discusses, your my friends, errors, frauds, irregularities. Inatoka mbio. Yes, issues of errors, frauds, and irregularities. If you discover them after the end of the year here, even if you discover them today, we are in March, and they relate to last year, you need to adjust these financial statements. Otherwise, they will not be said to be portraying true and fair value. You need to adjust. Let me give you one feature of adjusting events. Let me mention something about them, and that's what distinguishes them from non-adjusting events. We are discovering them after the end of the year, but they have their roots here. They have their roots here. They relate to this year per se. Only that they are confirmed after the end of the year. Remember the question we handled on ISA 700, which is on auditor's opinion on auditor's reports. Yes, I can even remember the fact of this case study. Ilikuwa PENAC Limited. Is it? PENAC and ZEPA. The PENAC was the first case, and then ZEPA. The PENAC, their year ended that 1st December. Then we had Beta Limited, who owed them 3.2 million. Debtors here were that 2 million. Profit was around 640 million. Then Beta Limited ceased trading somewhere in February. If you noted the date, it happened. They ceased trading after the end of the year, somewhere in February, 2nd February or 3rd February, thereabout. Yes. This is an adjusting event. Because this debt, this bad debt, this doubtful debt is included in this figure 3.2. So if we continue recording debtors to the tune of that 2 million, we continue recording profits to the tune of 640 million shillings, then they do not portray a true and fair view. This happened a month plus after the balance sheet date, but it has got its roots here. We have to adjust. So that's my example number 2, Roman number 2. Yes. Should I call them bad debts? Or I call them debtor being adjudged or declared bankrupt, or even death of a debtor. Debtor being adjudged, hiyo jina nimekumbuka, adjudged bankrupt or declared bankrupt, or he has died. That's a bad debt. Debtor being declared stroke adjudged bankrupt, stroke death of a debtor after the balance sheet date, you have to adjust. Otherwise, this debt figure, debtor's figure, will be overstated. Why are we doing this? Because the credit sale happened here. The errors, frauds, irregularities happened here. Only that we are detecting them after the end of the year. Only that we can now confirm that debtors to the tune of 3.2 are bad after the end of the year, because that's when Beta Limited has ceased operations. So that's adjusting event. That's adjusting event. Number 3, we have issues of IAS number 2. IAS number 2 inaongea kuhusu nani? Yes? Inventory. Si ni kweli? You've made me start calling them inventory. I used to call them stock. Yes, but the real term is yes, inventory. IAS 2 requires that we record that the rower of cost and net realizable value. Yes. So you can imagine if we crossed the end of the year with our stocks recorded at 240,000 shillings, then now in March, this entire of these stock have been sold off and we only realized 178,000 shillings, then it means our closing stock was overstated. And if we are to study stock valuation, audit of stock properly, we'll get all these facts. It's not one of the things that we're supposed to overemphasize here, but in lower levels we do. We even discussed the 2 ways of stock takes, before stock take, during stock take, and after stock. You can remember those subtopics, eh? Yes, of stock is a very sensitive issue, is a very sensitive component when it comes to audit. And it's one of the things that requires an auditor to revisit the client even after the end of the year. Sababu tulisema auditing stock is not very easy because we said we don't determine the crossing stock by way of double entry system. See, that's now it's confirmed. We don't confirm or we don't verify the crossing stock by way of double entry. We use the FIFO, RIFO, or even weighted average, and all these will give us different values for the same stock item. Yes, so it's such sensitive. We can only confirm their true value after they've been sold. After they've been sold. So when you sell and realize that you understated or overstated the stock items, then this is an adjusting event. Why? This stock, it remained unsold within this financial period, but you're confirming their true value after the end of the year. So they are adjusting. Why am I emphasizing this? Because non-adjusting events will have nothing to do with last year. Neither next year, neither 2023. Hazina uhusiano na 2022. Now I'm saying stocks related to this year, they remain unsold during this financial period, but you're confirming their true value way after we've crossed our financial period, way after we have crossed our financial period. Roman number 4, and we've given this example so many other times, an ongoing litigation, or let me talk of contingents in summary. Contingents, e.g. litigation. Na hii tutakutana nayo kwa environmental audit hata ilitatua last sitting. Question number is H2. Yes. So history contingents tutakutana nayo sana. Sababu tumefunga mwaka kama kesi bado inaendelea haijaamuliwa. What do we say about expenses? We recognize expenses when they are incurred. So tukiwa this year, we have to record the legal fees. Legal fees sababu ni za this year. So you will capture the legal fees that you are sure of, like 19,000, sharings in thousands. You add what? You add provision. We talk of provision. Maybe you estimate the cost, the case may cost you like 50 million. So you do that one provision. It is after the end of the year that you now confirm how much you've really spent, yes, or incurred as far as legal fees are concerned. That's what you do, even with regards to audit fee. Audit fee. Audit fee. Or even the director's emoluments. Director's emoluments. You always capture that which has been paid, and you do some provisions, debenture interest, the paid plus provisions, or plus accrued for that matter. Yes, but you can always confirm the true expense after it has been paid. So contingents are adjusting events because they happen within the year, but you are confirming about the true value, the true expense element after the end of the financial period. Hii kitu tutafanya swali ya June 2010 ya pure correction of errors. Yes, hapo ndio huwa naambia waheshimiwa kwamba usiende auditing class, auditing exam bila calculator, you'll be surprised. Umekuta hesabu pure. Pure. Yes. Pure. Yes, prudence concept there. Hesabu, it's there in past papers. Hesabu using your calculators, passing journals, you pass a journal. Yes. So weka hiyo kwa reminder kwamba calculator tutabeba siku ya mtihani. Don't ever leave it. Don't ever leave it. Yes, kuna rafiki aliniambia ilimkeep busy vile alienda akakuta mtihani hawezi attempt anything. So alianza kufanya budgeting sababu kulikuwa towards headman. Si akona calculate. Ana budgetia mshahara, anajipanga. Yes, you keep yourself busy to make sure that the 3 hours are well utilized. Yes, with the calculator. All right. We have Roman. What have you written about it? Are we writing any? Oh, you've summarized those points. Yes, let them remain that way. Let them remain that way in summary. I'll avail these notes right after this class. Roman number 2, we look at non-adjusting events. Non-adjusting events. You're trying to look at that question? Yes. Non-adjusting events. Non-adjusting events. All right, they are also arising after the B-sheet date. They are also arising after the B-sheet date. 1st January 2022, that 1st December 2022. They are arising after the B-sheet date. But, yes, they are arising after the B-sheet date. But we do not need to adjust in the financial statements. They are arising after the balance sheet date, but we need not to adjust them. We do not need to reflect them. We don't need to reflect this in the previous year's financial statements. They are arising after the B-sheet date, but we need not to disclose them. We need not to adjust them in the financial statements. Yes. So arising after the B-sheet date, but not required to be adjusted in the financial statements. But you can capture them in the notes if they are pervasive. You know, they could be off the balance sheet events, but they're very pervasive. So you recall the pervasiveness. Pervasiveness meaning that they could easily influence the decision making. Yes, that they could affect the decision making of the financial statements. So as such, they can be recorded in the notes. Yes, recorded in the notes to the financial statements when necessary. So there are those instances which they are not necessary. They are not pervasive. They are not. All right, Josh, we are saying they are arising after the balance sheet date. They are arising after the balance sheet date here, but not required to be adjusted in the financial statements. Take note here, they are arising after the balance sheet date, but they need to be adjusted in the previous year's financial statements. They are still arising after the balance sheet date, but not required to be adjusted in the financial statements. They can be recorded, they should be recorded in the notes. This is a key word, notes to the financial statements when necessary, when need be. If they are pervasive, that is, if we feel that they may influence the decision making of the intended users in one way or another. As I had mentioned earlier, they have nothing to do with last year. Like Roman number 1, mergers and acquisitions. Sometimes we refer to them as business combination. This, for instance, it could be happening somewhere 1st of February. It has nothing to do with last year. Last year, company A and B were separate legal entities. This merger has only happened this year. It has got nothing to do with last year. So they are non-adjusting events. So you see, hakuna kitu ya hiyo merger ilifanyika hapa. So we need not to adjust. Roman number 2, we can even talk of closure of business branches, business operations, or branches. Yes, tumeamua kufunga branch fulani for some reasons. Blessing is asking, how will the auditor know about legal fees paid after the balance sheet date? Ni sisi huwa tunaassume maneno kama auditors kwamba ukisha audit na umalizana na vitabu, you write your report, that's done. You need to keep on visiting the client to confirm this. Because where do you record such things? Do you know of an auditor's diary? Do you know of an auditor's diary or auditor's notebook? Yes, when we are discussing ISA 230 about audit documentation, alongside permanent audit file, current audit file, standardized working papers, and automated working papers. We add auditor's diary, stroke notebook, some things that require future clarification, either from the audit partner or from the client. You record them there. Just like stock, you can tell the true value of stock way after the balance sheet date. You can record it, and especially if you only record suspicious items. Because when you apply professional skepticism, you'll query, really, this stock is worth all this much? If this is an area of audit query, then you record it in the auditor's notebook. That means it awaits future confirmation. So it's not all the times. That you go back to verify. You only do so if there are things that needed clarification. Maybe you realize the legal fees was exorbitant when you compare with the prevailing market rates or what they have incurred in the past cases. Then this is way too high. It may require to be adjusted immediately, or if they still insist this is the provision, it can be confirmed at a later date. When the case is concluded, blessings, I think I can say that. How will you, auditor, confirm all the legal fees paid after the balance sheet date? After the conclusion of the case, now you can verify this because you have the documents, you have the fee note, you have the bank details, the bank transaction. If you paid via check or something, you can always confirm these amounts. That's why we are calling them off the balance sheet. You can only confirm them after we've crossed the fine. It's a good question. All right, closure of business operation or branches after the BC's date. That has nothing to do with last year. We had our 12 branches. We've closed 3 or 4 after the BC date. So the previous year's financial statements portrays to in fair view and need not to be adjusted. Roman number 3, destruction of PPE items by fire, for instance, after the B sheets. Hizi natural calamities. Kumechomeka, kuna floods, PPE items have been destroyed. Yes. Destruction of PPE items by fire, for example, after the B sheets date. Those are off the balance sheet events. Hazina, tukifunga mwaka, all the PPE items were intact. Yes. Is this connectivity affecting everyone? Namani? Yes, I think we are good. All right, the next point we can give an example. Disposal of PPE items again after the B sheet date. Disposal of PPE items after the B sheet date. Disposal of PPE items after the date, after the B sheet date. Next, major ordinary share transaction issue. Major ordinary share transaction issue after the B sheet date. Major ordinary share transaction issue after the B sheet date. Hii issue ni kama kufanyike kama kuna bonus issue, kuwe kuna fresh issue, kuwe kuna rights issue after the B sheet date. Hizo hazina uhusiano na last year. Hazina kabisa, sababu tukifunga shares were intact. Zimefanyiwa any adjustment after the B sheet date, then we need not to adjust. This is only affecting the 2023 onwards. 2023. Sababu hata tukipeana dividends hapa, when we are declaring dividends, we declare dividends for shares fully paid. So kama zimeongezeka through bonus issue after the B sheet date, those additional shares will not qualify for dividends. though we have some companies which may pass some resolutions with regard to issue of dividends, but they are paid as per the fully paid ordinary shares, fully paid ordinary shares. Last number 6, can I give an example? In story revaluation, si revaluation inakuwa IS number 16. IS number 16 ndio inakuwa story ya revaluation. Sababu tunaweza funga hapa shamba yetu ikiwa worth 1 million. Saa hizi sababu ya some dynamics, hizo plots zimefika hata 3 million sometimes. Yes, value upanda. Kuna ni Bitcoin, what are people transact in Bitcoins or something. Yes. So changes in value of assets. Changes in values of assets, maybe through revaluation. This is when we record the value, we record the assets at their most appropriate carrying amounts. So value inabadilika for some reasons. Tunaweza ingia mwaka asset fulani ikue supply yake imepungua, so demand iko juu, price yake ipande. Sisi tukifunga mwaka, we recorded them at their net book values or the most appropriate carrying amounts. That adjustment is happening after the end of the year. It's happening after the end of the year. They have closed the top branches, having some information which should have been considered in the balance sheet. Can't auditor recommend to adjust the financial statements to correct the cutoff for omission queries. Then those are adjusting events. If they have closed some businesses, closure or discontinued some operations, and those operations had aspects affecting previous year, then they cease to be, that's a mixture of non-adjusting and adjusting. Because if there's some transactions which could affect previous year's financial statements, then they are adjusting, they are adjusting. It means those are transactions which commenced last year, which have got some roots, which have got some relevance to last year's financial statements. They need to be adjusted. They need to be adjusted. Ni kama vile huwa saa ile unafanya kufunga kampuni. Si lazima ufile returns kwanza. Haiwezi fungika. You have to file returns, then you close. So if you're closing, if it had some pending issues relating to last year, they have to be adjusted, they have to be settled. If you had some debtors, there has to be a mechanism on how to handle them, then you close them. So closure could be, closure is a non-adjusting event. But if we had some transactions with regard to the discontinued operation, which relates to last year, those are adjusting events and they ought to be adjusted. They ought. It's a good question, Mr. MV. Excellent, excellent. Subtopic. Audit procedures on subsequent events. I want to rub here, so our online students are taking some screenshots. Believe we have already done it. So subtopic, audit procedures on subsequent events. Audit procedures on subsequent events. Again, this is where we say that it depends with when these events are arising. All right. See here, we have our B-sheet date. We have our B-sheet date like that. 1st January 2022, that 1st December 2022. This is our B-sheet date. B-sheet date. There are those events which will arise after the B-sheet date, but before reporting. There are those which will arise after reporting, but before publication. Those will arise after publication, but before the AGM. Check these events arising after the bill sheet date, but before the reporting, before the auditor reports, before Andike report is a 700. We could be having some events arising. Sometimes they arise even after reporting. You've already reported, but some events come to surface, but before publication. As you can kwa bank unakuta wameweka vitabu zao pale, been published. Anakuwa ameziweka mahali. Ushaiona kwa bank? Published accounts, IAS number 1. Yes. Before publication or before they are available to public consumption. That's what I mean. Before they are available, zinawekwa hata kwa gazeti. That's publication. Other times, after to share publish, but before the AGM. Saa zingine hata mambo inatokea after the AGM. All these are off the balance sheet events. And we say, after reporting, the general rule is auditors do not have any responsibility. Auditors' responsibilities with regard to the balance sheet event ceases after they report. But we say, if those events are brought to their attention, then they have to act responsibly and professionally. Because as sometimes we are concerned about how will we know how much they paid to the lawyers? How will we get to know how much was the true value of the closing stock? And we have audited, we have given the report, and we have left the client's premise. How will you know? So we are saying, but if these happenings are brought to the auditor's attention, they have to respond in the most appropriate way. In what sense? What do we mean by most appropriate way? Like if they've already been published, there may be a necessity that those books of accounts be recalled, that we record the auditor's report to draft a new report. Sometimes those happenings of the balance sheet events could be very material, that they declare our books of accounts, the usual two brothers, null and void. Yes, they could be so material that they declare null and void. That now we need to go back to drafting a new report. We need to go back to draft new financial statements. So after reporting, auditors do not have any responsibility, but we say, unless the events. Sababu gani? Sini management wako na primary responsibility to prepare books of accounts which portray and fair view. So hata wao wakiona hizo happening, they should be captured. They need to understand whether they are adjusting and adjusting and such. So unless the events are brought to the attention of the auditors, that they have to respond and act in the most appropriate way. Unless the events are brought to the attention of the auditors, that they have to respond and act in the most appropriate way. So in the notes that I'll be sending you, I've indicated, for instance, if they've already been published, but before the AGM, maybe the auditor may need to issue another new audit report based on the revised financial statements. That's what I mean. That's what I've summarized by indicating acting in the most appropriate way. Yes, that may issue another new audit report based on the revised financial statements. Review the steps taken by the directors to ensure that anyone who had been issued the previous financial statements is informed of the revised set of the financial statements. Walikuwa washa access hizi vitabu because they've been published. Waambiwe, yes, kwamba, so we see sometimes the government recalling all the, we call them fra in the supermarkets. Hizo unga zisiuzwe, ziko na aflatoxin. Although tunashinda kwa sasa wenye washanunua. Yes? Yes? Sorry, I was just on a write a note about the two brothers, Nar and Void. Sometimes they are brothers. So unakuta kwamba inakuwa recalled, isiuzwe. Yes, that's what you're saying. Kwamba vitabu tusha release, but it's not right. It does not portray to a fair view because some things have come to surface which makes us to declare the previously issued set of certified financial statements to be null and void. Lazima tuwajulishe wenye washachukua hizo. Seek legal and professional advice. That is number 620. And sometimes it's beyond us. It's beyond us as auditors, because it could have some legal implications, some other aspects. We seek legal advice. We seek legal advice on this. So that's what we mean, that the auditor needs to act in the most appropriate way. In the most appropriate way. In the most appropriate. Of course, the situation dictates. The situation dictates. The magnitude of the balance sheet event dictates, and the other situational factors, other contingent factors, will influence to a great extent on how the auditor will respond. So get right, in both instances. Sababu kwa mtihani hawaulizagi kuwa combined hivyo nimecombine. Watakuuliza hii after reporting, but before publication. Auditor does not have any responsibility. After publication, but before AGM, auditor does not have. Let me read what I have. You don't have to write, because I'll have the notes about. Now I'm reading on before reporting, but before publication. Auditors do not have any obligation to perform procedures or make inquiries regarding the financial statements after the date of the report. So that the opening statement does not have any obligation. The directors are responsible for preparation of the financial statements, and therefore they should inform the auditor of any material subsequent events between the report date and the date of the financial statement being issued. If the auditor becomes aware of material misstatements which may affect the financial statements, the auditor should consider whether the financial statements need amendments. The auditor should discuss these matters with the directors and consider the implication in the report. Taking additional action is appropriate. So ni hivyo inabaki. Na hii ingine, after publication but before the AGM, again we start by saying auditors do not have any obligation to perform procedures or make inquiries regarding the financial statements after they've been issued. It remains. That's the stand. Sababu tumesema ni management wako na responsibility. But if they inform him, because again, auditors are not dominantly present in the client's premises, they will not know until they visit. And it's important. It's important to have regular visits, to have regular visits to the clients, and especially surprise visits. Have a surprise visits. Yes, because this way you will enhance the element of ISA 310, understanding them properly. This way you'll get to know basically what happens, because when they know that the auditor is visiting, then they can always stage a show. They can stage a show. Yes, so surprise visits are very important. They're part of the control procedures. We discussed the 5 elements of ICS. Yes, the control procedures. Of course, it may affect the auditor's independence. We say we need to strike a balance, because again, not visiting them, it means you are auditing a client who you are not conversant with. You need to understand them. You need to have intimate knowledge about the client's operations. Excellent. Let's answer the question of after the BC date but before reporting. This is where the auditor performs audit procedures on subsequent events. This is where we have some audit procedures, which includes, hapo ndio kazi iko, kama zile 8 points I gave you on audit procedures on going concern. You have to review the procedures here. Review the procedures put in place by the management to identify subsequent events. Hii point uweke mahali pazuri. Sababu tukidiscuss related parties tunasema review the procedures put in place by management to identify related parties. Tukisoma contingent point number 1, review the procedures put in place by management to identify contingent events. Hiyo ni point number 1 kwa hapa, so hii ni kusaidia wase wenye wana claim. Hii ni point kwa hapa, na ni point kwa related party, na ni point kwa contingents. Na ni point kwa contingents. Muhimu sana, the management criteria. Yes, that's very right, Sir Oppo. The regular visits are likely to affect his independence. But again, because we are professionals, we know what we want to achieve. We always say we can put in place safeguards. Yes, that's why we discussed the safeguards to auditors' independence, because it's advantageous to interact with the client. But again, if not done with caution, it's likely to jeopardize one's independence. So ensure it does not go beyond the levels of impairing the auditor's independence. So that's very important. Number 2 is stories of minutes. Then minutes, they feature everywhere. Yes. Minutes ziko mahali. Na mtu aliniambia hata ukiuliza principles, wewe jua division of labor iko kila mahali. Yes. Yes. So ni hivyo. Minutes you realize hata kwa PFIC tulisoma minutes. Hata kwa group yenyewe is 600 minutes lazima uangalia, and especially if there was acquisition of a component, disposal of a component, you have to check the minutes. Hata kama ni una audit purchase of a laptop kwa kampuni, angalia minutes, lazima wali agree kununua. So minutes are a very rich source of for going concern. Point number 1 was on minutes. So what will minutes reveal to us? Review minutes of directors and management, including AGMs, concerning material subsequent events on how they will resolve them. Concerning material subsequent events and how they will resolve them. I read again that we want to review the minutes concerning material subsequent events and how management intends to resolve them. And how management intends to resolve them. Management wanapanga aje kuzihusu, wanapanga aje kuzihusu. Yes. So when the examiner is marking akiona minutes, anajua umegonga deep, because minutes have got all this. So we want to check we've classified them into 2. Adjusting and adjusting. We want to check how management has treated them. So Roman number 3, you can say, review how management has accounted for. Has accounted for them. That adjusting have been adjusted, and adjusting have not been adjusted. Maybe capturing the notes. That's what we want to confirm. So ni vivyo hivyo kwa contingents. Nilikwambia ziko probable, possible and remote. Hiyo point tunaitumia bado kuangalia kwamba probable have been created provisions for, possible have been captured in the notes, remote have not been recorded anywhere. We check that. So we start with the criteria of classifying the contingents, the minutes on how the management wishes to handle the contingents, and we review that these contingents have been properly accounted for. Yes. Hizo ni points 3 zinafuatana mutawaria in those 2. Number 4, we review the PFI. The PFI has also featured somewhere in going concern. Yes, we review the PFI in order to be able to address, you can write this, review the PFI in order to be able to address, the company's trading position, in order to be able to address the company's trading position and going concern, in order to be able to address the company's trading position and the going concern. Zinashikana aje? Hizi tumeziita subsequent events could have an implication on going concern. Tumepeana examples are adjusting kama ni errors. Kuna some frauds which are major. Ati hiyo fraud ikikuwa executed, business has crippled. Ama hiyo litigation inaweza amuriwa kwamba tufunge biashara. Kama hii China mnaona inaenda aje hiki. Watu watafungua ama going concern. Going concern is already threatened. So you can see that. Yes, because now it's an ongoing, not litigation per se, or is it already in the courts? No. It's back and forth with the government and such. So it's going concern is already threatened. Yes. So it's something which remains unknown. It's a contingent. Actually, that's a contingent. It's a pure contingent, because the outcome will be known at a later date. That's when you can tell whether it will be reopened or it will amount to closure. That's what we mean by contingent, that it can only be confirmed at a later date upon occurrence or non-occurrence of certain future events. Yes, excellent. So we are saying there's some subsequent events which are likely to affect the going concern. That's why it is featuring there. Next point, lawyers, inquire from lawyers regarding status of cases. Inquire from lawyers regarding status of cases. Inquire from lawyers regarding status of cases and the extent of liability. Lawyers regarding the status of cases and extent of liability. Extent of liability. Tunasikiaga God is omnipresent. Siku hizi kuna lawyer ako omnipresent. Wanamuita nani huyu omnipresent lawyer? For everybody, for everyone, yes, in any crisis, at any hour, yes, and yes, here's who? Yes, all those issues. We need to be omnipresent accountants. When clients are faced with accounting issues, we are available for them. Yes, extent of extent of liability. Extent of liability, extent of liability. Mtu anajita INU, extent of liability. All right, next point. Check the accounts receivable. Check the accounts receivable. Sio sasa tunaangalia mambo ya debtors. Sababu debtors tulisema ni adjusting events. Check the accounts receivables and cash received from debtors. Check the accounts receivables and cash received from debtors. And cash received from debtors to determine whether, check the accounts receivable and cash received from debtors to determine whether the accounts receivable balances, to determine whether the accounts receivable balances have been realized. Check the accounts receivables and cash received from debtors to determine whether the accounts receivable balances have been realized. The accounts receivable balances have been realized. The accounts receivable balances have been realized. So unaona hiyo ni kama ile tu historia ya stock sababu wakiweka debtors means they are good debtors, because these debtors are net of provisions for bad and doubtful debts. They are net of bad debts. So hii itakwambia if they realized all of them, if not, then the provisions for bad and doubtful debts was understated. These things can always be verified, but at a later date. Number 7. Number 7. Verify the amounts realized. Verify the amounts realized. Verify the amounts realized with regard to sale of stock. Verify the amounts realized with regard to sale of stock. Verify the amounts realized with regard to sale of stock. You have to be sure overemphasize. To be quite sure overemphasize. And lastly, what do we seek? Number 8, management representation. Reta ISA 580. Yes, the last point. Seek management representation letter seek management representation letter. Seek management representation letter is a confirmation. Seek management representation letter is a confirmation that management is a confirmation that management is a confirmation that management have disclosed. Management have disclosed all subsequent events. Management have disclosed all subsequent events. Management have disclosed all subsequent events. Tulisema, tukisoma ISA 580, kwamba we require this letter because it confirms the assertion of completeness. Kuna point tuliandika hivyo. Actually, how we introduce this letter, we say that it confirms the assertion of completeness. Very important. Has everything that ought to be recorded being recorded. Kila kitu imekuwa recorded. Kila kitu imekuwa recorded. That's it on subsequent events. Na kuna tu maswali wewe utajaribu kuperuse sababu wakati wangu nao wa kuangalia hizo maswali unawadia. Wasaa wangu wa kuangalia hizo maswali. What about enforceability of letter of support? Letter of support, enforceability of letter of support with regard to subsequent events that may not feature in subsequent events. Letter of support, letter of support iko pale kwa going concern tuliweka because it's one way of elevating going concern complications. Where would we use it here? Maybe it may not feature 100%. Mheshimiwa Oppo, it may not feature here. Yes, ni ile jina iko kwa simu yake, username. So we are moving on where? Kwa ile point number 9, kwa 10 steps of an audit. Unakumbuka 10 stages of an audit? Tulilist down siku fulani. Kwa hiyo point number 9, tumebakisha group audit, tumebakisha related parties. Tukishamaliza hayo basi, tusome kitu inaitwa forensic. Tufanye kitu inaitwa environment. Tufanye kitu inaitwa money laundering. Yes? You know, these are like, they are very small. Tutakuwa tunasoma moja, tunaenda break ya maombi, tunarudi hiyo ingine na hiyo inaisha. Moja. They are very small. Yes. After that, other issues that we are likely to discuss are ISA number. We can discuss ISA 610. This is internal audit. It's a 610 internal audit. Will also be audit of cooperatives and banks. IAS number 30 and cooperatives. Questions that they never examined. Some syllabuses, but you can't afford to assume. Never know when the thief will come. Yes, banks and cooperatives. We even need to look at the issues of public sector. I'll look at the issue of public sector audit. I'll look at a VFM audit. We even look at receivership and liquidation. Receivership and liquidation. Receivership and liquidation. What else are we likely to cover when the syllabus is done? Huh? Where? Okay. Ukishasoma number 1, 2, 3, 4, 5 and public sector, hata exam ikakuja kama umesoma vizuri easy napita. Easy na hizo. Easy na hizo. So we are good. We are very 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 good. So this month ndio sasa ile tulisema mtihani yetu tutafanya. Yes, because we are very good. We are very good. Things are good. insurgent. Oh, na hapa kwa hii topic huwa inaitwa, kama hawajabadilisha, inaitwa corporate governance. Corporate governance, So huwa inahitaji tusome internal audit and audit committee. Haka ni ka topic kadogo lakini very sensitive. It features so many times. There is even a day they did 20 marks of this. That we have a new company. We have a new company which has been registered in stock exchange. To be compliant to corporate governance rules and regulations, they intend to put in place an audit committee. Come up with a write-up to the directors on matters audit committee. So hiyo ilikuwa inaanza na address yako, the addressee, salutation, then reference, audit committee. You define what it is, you define the composition, you define the roles, you talk of advantages, disadvantages, you sign out. 23 marks. Hakuna wasiwasi, si niko hapa na nyinyi mko hapa. Bas. Hiyo maneno yote tunatatua. Hiyo mambo yote tunatatua vizuri. I'll show you how it's done. Plus of course I'll show you how to write a management letter. It's 260. Na bado tutafanya hiyo swali ya correction of errors when you come with your calculators during audit class. Unaandika mahali ndio usahau management letter na errors. Nikumbushe tufanye correction of errors. Hesabu ya errors. All right, we stop at that. We thank God for this new month. He has really been very faithful and gracious to us. We still pray for Lane. Nakuru kumenyesha leo. Najua itakuja hivi. Itakuja hivi. Inakuja. This is the grace. Now may the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit with us now and forevermore. Amen. Blessed evening. Be safe. Tuonane Saturday. Hiyo ndio siku utasaini mara mbili, leo na Jumamosi. See ya.